Several investors across the globe have been really concerned about inflation lately. For over the previous 40 or so years, it has been something about which we have not had to worry about. It's been ideal that we've been able to keep it around that 2% level. However, several investors are advising that inflation may be approaching. Munger issued a warning saying that if you print too much money, you eventually end up in a similar situation to Venezuela, a nation ravaged by inflation. History, according to Michael Burry, is not meaningless. This text examines American inflation in the 1970s, which is more current than one may imagine. According to Ray Dalio, while the economy is recovering, inflation pressures are also recovering. Fortunately though, in this video, I'll walk you through how to profit from inflation. But before we proceed to that, it would be lovely if you subscribed and hit the notification bell, so you will be updated whenever. You can change your mind anytime you want, but otherwise you'll always be the first to see once we upload new videos like this. So how about we keep going? How you may genuinely profit from inflation is the most crucial topic we'll cover. You need to know how to get prepared because a lot of people are going to perish from what is about to happen. So let's examine some of these red flags that we've observed. First, the effects of all that money printing are something that not enough people are discussing. In light of the pandemic, there were many people in need of financial assistance. A large amount of free money was handed to the public by the government. They distributed trillions of dollars to companies who were having trouble making loans, dealing with emergencies, or just needed money. They used hundreds of billions of dollars in tax relief provided to those who weren't working, hundreds of billions of dollars on healthcare, and some for government necessities. However, this cash had to originate somewhere. In essence, money sprang out of nowhere, printed by the Federal Reserve, as if by magic. And somehow, all of our troubles were resolved. If only generating money had no consequences, and that was the case. But this isn't the case, as anyone familiar with basic economic principles will be able to tell you. Inflation is one of the main issues that arise from printing trillions of dollars. Since people will have more money to spend if you start giving them free money, the demand for goods would rise. What happens to prices when demand rises? They stand. According to Charlie Munger, if this continued, you would become like Venezuela, which experienced hyperinflation. But this is only one of the components creating inflationary signals. The second is the aging of the global population. When compared to retirees, there were a lot more young individuals in the 1970s. In the 1970s, there were more than twice as many young people in the USA as there were retirees. For each category, it is essentially the same today. A similar thing happened in the UK in the 1970s. There were more young people than pensioners. Today, the ratio is reversed, with more pensioners than young people. If you continue traveling through the developing economic nations, they all tell the same narrative. The proportion of people who are working age is dropped in all of these powerful economies. Instead of expanding, China is slightly contracting. Developed nations, same thing. Eastern Europe has the same pattern. This decline is crucial since fewer supply results from fewer able-bodied people in the workforce. This implies that you can create less of it. Therefore, it implies an increase in labor costs. The company that hired the employees now passes this expense along to the customers. In other words, they raise prices for products and services, which eventually causes inflation. These are just a few of the elements that we should be aware of to prevent future high inflation. However, the primary concern is how to profit from inflation, or at the very least, avoid losing money. Considering most of us have never before encountered high inflation rates. Since there hasn't been any inflation since the 1980s, most people are unsure of how to invest. We're not used to seeing our currency lose value over time, to bonds and equities losing value, or to other asset classes being consumed by inflation. You must be aware of the asset classes that perform well in inflationary conditions. One of the finest options available right now is purchasing real estate, but doing so involves incurring significant debt. Let me explain the math that underlies this. Cash is therefore the worst asset class to own during inflationary periods. since, as is evident, your currency is losing value. What therefore is the polar opposite of money? Debt. Inflation so consumes your debts rather than your money. This is one advantage of real estate. What then happens to the price of your house also as a result of inflation? It ascends. Another benefit of inflation in real estate is that it drives up property values. But your rental revenue also rises in line with inflation. So there's an additional benefit. Your debts are consumed if you invest in real estate, making them less of a burden. 2. Your home's worth rises. And 3. Your rent payments rise. Therefore, this investment will yield several returns for you. And you could be able to make a lot of money from it if you choose to do this intelligently. If you don't have the money to buy real estate, you can buy a real estate investment trust, or REIT, which will invest in real estate on your behalf and allow you to participate at considerably reduced costs. In times of inflation, there are other assets besides real estate that might be profitable. Gold is another asset that often does well in this area. Now, allow me to clarify. Therefore, no one wants to store cash during inflationary periods because investors see their cash's value decline. And they consider what kind of asset class has a finite supply and its worth cannot be diminished. Gold is undoubtedly one of the solutions. Because of this, gold's price soars as investors start to anticipate inflation. And if you look at the history, the most recent time of high inflation was from 1970 to 1980. It ranged from 5% to approximately 15%, which is extremely high. What occurs to the price of gold throughout this period? Like a rocket, it soared upwards. From roughly $250 to more than $2,000 it increased. This is why gold is such a solid investment to have during times of high inflation. But you want to acquire it now while it's still inexpensive. Before we continue, we would love to see your suggestions in the comment section about particular topics you want us to talk about in the future. Done? Let's get going. Now that inflation is high, cryptocurrencies like Bitcoin are likely to be the other place investors would flee to. Since Bitcoin has only been around for a short while, there isn't much historical evidence to support it, but there is logic, as I'll show. Therefore, the main effect of inflation is a decline in the value of the dollar. As we previously indicated, it has been degraded and printed on to make it less effective. Now that there is a limited supply of Bitcoin in the system, you cannot degrade it. There are just 21 million of them available. Your dollar is therefore losing value and becoming less valuable, which causes individuals to turn to other forms of payment. Among them is Bitcoin. This is not a promise, mind you. Although there is no precedent for it, I believe that if hyperinflation occurs, Bitcoin will likely take off. Thus, we have Bitcoin, real estate, and gold. These are the kind of investments that will do well when there is inflation. The stocks that perform well and poorly locally are another item you need to be aware of. We'll use Warren Buffett, the greatest investor of all time, as an example to demonstrate this to you. In the past, he has spoken extensively about stocks and inflation. Basically, during periods of rising inflation, you should concentrate on stocks that have 3 essential characteristics. 1 is the capacity to produce money rather than spend it. 2, businesses that can easily raise prices to keep up with inflation. And 3rd, to acquire businesses that can accept significant dollar volume increases in business with only minimal extra capital investments. You should therefore select these stocks more if future inflation is expected to be high. Having financial problems during a period of high inflation is not uncommon. According to Thomas Sowell, hyperinflation can take virtually your entire life savings without the government having to bother raising the official tax rates at all. But it doesn't have to be this way. Intelligent investing can prevent inflation from stealing your money. In fact, while most people lose money during inflation, you may make money with sound investments in the appropriate stocks, gold, real estate, and possibly some Bitcoin. Thanks for watching. I hope you learned something meaningful from this video. And for more videos like this, don't forget to subscribe and hit the notification button. Until next time, see ya!